If we ever do end up breaking $3.82, I will put the limelight on $4.44 as an overall bullish target. Let's start today's video breakdown. I want to just thoroughly go over the landscape that we had painted in previous Zoom calls to just show you guys that we are at the forefront of delivering accurate technical analysis and fundamental analysis via institutional insights from both a technical and fundamental standpoint. So in terms of technical analysis, okay, this is a video breakdown from just a few days ago, just to show you guys some of the most recent updates. July 20th, 2025, when XRP's price was trading about $3.53, we had mentioned to not only the general public, but to you guys that we were seeing some failed attempts to break above the $3.82 sell delta, and that would most likely result in a pullback down into $3.25 or $2.94, where then we could possibly see buyers rekindle, defend their previous prices, and possibly hold that as support. Now, if we fast forward to today's price action on XRP, let me just pull up TradingView real fast. We can see the level of accuracy now has unfolded to the T of a degree, which is not uncommon here in this community, considering some of the algorithms, data analytics, and things that we have access to. So you can see XRP's price pulled right down into that $2.94 range. During London session, the market makers started to defend that price level, and we have now come back up into the $3.25 delta, literally trading from delta to delta. So we're going to continue to cover the technical analysis. Let's first go over the fundamentals, and then we'll come back and do a TA breakdown and overview of XRP before we head off today's call. I forgot yesterday to do a breakdown on ETH and Bitcoin. So after we end the XRP analysis and the total cryptocurrency market cap analysis, and I try to show you guys some things that I'm being mindful of before I completely jump ship, shift my market perspective from bullish to bearish, and start to consider possible deeper retracements. I want to just go over those first, and then we'll transition over into ETH and Bitcoin so we can end the Zoom record. All right. So let's cover the fundamental landscape first, just to always show you guys timestamps. Timestamps, in my personal opinion, as an influencer that's putting his money where his mouth is at, is extremely important. So that way you guys, unlike other influencers on the internet that just say things and don't try to back it up or show claim or show that they said this or this, and that. I try to make sure that you guys see step by step how you can put some of the pieces of the puzzle together that I'm trying to give to you all to see the bigger picture. So here is our report from yesterday, where at the bottom, I warned that the recent pullback seems to be more of a breather than a full-on reversal of the recent bullish trend. You can see in the yellow highlights, I mentioned while the market is taking a breather, the bullish structure has not yet broken. I also mentioned constructive developments such as an EU or US trade agreement could reignite bullish momentum. We also had a private member go on to mention that unlike other communities, they appreciate ours because there's another community that they're involved in that pretty much induced them to panic sell, which in my personal opinion is illogical considering the current market conditions. However, we do need to be mindful that if the conditions shift, it is a possibility for the market to pull back deeper, but we're not seeing those signs just yet. So it would be premature to assume that the market is just going to crash unless there is a fundamental reason for that. You can see now the market has pretty much rekindled its losses from yesterday as buyers have made another attempt to defend their previous prices. Yesterday's high came in at 3.92 trillion. Yesterday's low came in at 3.76. And we have rekindled about 62% of the losses from yesterday, right? So this to me does not look like a full-on market reversal or, complete risk-off sentiment yet. So let's break down the landscape today and talk about what we could possibly see moving forward in terms of fundamentals that could continue to support risk assets or change the sentiment to more risk-off. So today, the total cryptocurrency market cap saw some mild sell pressure. Saw some mild sell pressure, yet still remains positive on the day, showcasing notable resilience. Despite several data releases that could push back against the Fed rate cut narrative, lingering uncertainty around the EU and US tariff negotiations, the broader market continues to hold firm above last week's lows, which is a key technical level around $3.6 trillion. At the time of writing, the market has recovered approximately $30 billion intraday, signaling that buyers are still active and sentiment has not yet decisively turned risk off. As for the labor market data that we got today, the latest US labor data adds pressure to the Fed's dovish stance that we've recently seen in previous weeks. One of the predominant reasons why we saw excessive risk on sentiment in July was because of the dovish speakers that we got from the Fed officials, where they came in multiple times and said that they support rate cuts, right? They also talked about how inflation that they're seeing right now could be temporary due to the tariffs, right? Initial jobless claims for the week ending in July 19th fell to 217,000, marking the sixth consecutive week decline and the lowest level since mid-April. This is well below economists' expectations, which forecasted a rise to 227,000. Even unadjusted claims dropped significantly, down over 45,000 to a total of 215,000. Meanwhile, continuing claims ticked up slightly to 1.96 million, suggesting that it's still challenging for some job seekers to re-enter the workforce. Though the overall trend remains steady, the 4-week average also fell to 224,000, reinforcing the strength of the labor market. JP Morgan economists noted that the current claims remain quite low and don't on their own point to any stress in the labor market. Why is this so important? Because at previous FOMC meetings, Jerome Powell specifically mentioned that in order for them to be comfortable cutting rates, they needed to see more weakness in the labor market. And we have yet to see that. Remember, in a report and on a Zoom call that I touched on back on July 17th, I said to you guys that we could see an environment that creates a pullback if the market realizes it got ahead of itself by pricing in rate cuts too aggressive. Okay, because if moving forward in August, we continue to see higher inflation, we continue to see stronger labor market data, and we see a shift in Fed sentiment where they flipped dovish in July to more hawkish leaning or neutral in August, pushing back on rate cuts, then we're most likely going to see some type of pullback, or that puts some sell pressure intraday on riskier assets like crypto, who over the past 2 months have aggressively priced in that some point in time later on this year, we're going to see the Fed cut rates. If the data does not support it, then the Fed's likely not going to cut rates, as we can clearly see that Jerome Powell is not politically inclined to move the policy for the Fed because of Trump, right? So they're going to continue to remain data dependent, so do we. With no major signs of labor market weakness, the Fed has little reason to rush into rate cuts immediately. Adding to their caution is the potential inflationary impact of higher tariffs, which remains a concern among central bankers. On the PMI data front, we saw the S&P Global Flash Composite PMI for July come in stronger than expected, rising from 52.9 to 54.6, the highest level in 2025 and 30th straight month of expansion. While manufacturing dipped slightly into contraction territory at 49.5, remember that's slightly below the 50 grade threshold, the services sector surged to 55.2, marking the fastest pace of expansion since December. According to S&P Global's Chris Williamson, the latest PMI readings indicate that the U.S. economy could be expanding at a 2.3% annual pace in Q3, significantly stronger than the 1.3 suggested in Q2. So this paints a clear picture that the U.S. economy isn't weakening like economists are expecting and projecting, and this again could be another catalyst that weighs on those rate cut bets later on this year. So we just need to continue to be mindful. Rising input costs, particularly wages and tariffs, led to accelerated output price inflations, among the highest seen in the past 3 years. Although inflationary pressures are rising again, something we need to keep in mind is that many in the market still view these as temporary for now. That belief is helping preserve the optimism around rate cut bets. Keeping in mind that in the future, any significant shift in Fed rhetoric, particularly from Chair Jerome Powell in next week's meeting, could change that sentiment. So we just need to be mindful of that because we are starting to see some increases in inflationary metrics. Okay. On the global trade front, this is one of the primary supporters of the risk on sentiment that we're seeing rekindled back into the markets today after the last 48 hours worth of sell pressure. On the geopolitical front, progress in global trade talks is still boosting risk sentiment. You can see that headline here, gold slips, gold being a safe haven asset, seeing some sell pressure as jobless claims fall and easing US trade tensions boost risk assets. The US and European Union today reportedly are moving toward a deal that could involve a baseline 15% US tariff on EU goods with certain exemptions. Here you can see in this little tiny report, that's where I gathered that information from. This comes just after the US and Japan finalized a trade deal agreement involving reduced tariffs and a massive $550 billion investment and loan package headed to the US from Japan. Even though we have seen some profit taking over the last 48 hours in crypto markets have responded favorably to these developments. Sorry, excuse me, let me pause. Even though we have seen some profit taking over the last 48 hours, crypto markets have responded favorably to these developments. Albeit a lot of people think that we haven't seen a positive development. This pullback that we just recently saw, let's go over to the total cryptocurrency market cap. Okay. This was yesterday's low. However, this $3.58 trillion mark right here is last week's low. So even though we have seen some slight profit taking, buyers making another failed attempt to push prices higher, the markets actually cheered this recent trade development. And I told you guys in yesterday's call that all in this area in previous weeks, the market was pricing all of that in. So when the announcement came out, that the trade deal between Japan and the United States was relatively positive, well, the market had already priced that in. And so buyers that were in profit in all of these areas, of course, started taking initial profits. Keeping in mind, I just told you guys we're at the end of a business month as well, right? And so that was one of the primary reasons yesterday as to why we saw some sell pressure, because everybody that had already priced in the bullish narrative of the bullish trade deal between Japan and the US had already been in profit. And that did not boost market sentiment yesterday. It allowed for buyers to take profit and manipulate people who thought that the market was going to continue to go higher to get trapped in buy positions, right? Scalper goes over this all the time. Sellers trapping buyers in buy positions at highs from retail investors or uneducated hedge funds or people with lesser information that think the market's going to go higher. They get trapped in positions and now they won't be in profit until the market goes back higher above those positions, right? That's literally all we are seeing. We're seeing a battle between buyers and sellers trapping buyers who got into the market late, right? So let's see, where did I leave off? This talks about fiat currency because we have to remember the strength of fiat currency matters in this global market, right? So we saw the Australian dollar surge to an 8-month high, and we saw the euro continue to trade near multi-year highs. Why is that important? Because they're both riskier fiat currencies. Okay, especially against the yen, especially against the dollar, and especially against gold. They're more riskier currencies. As noted by Commonwealth Bank of Australia's Carol King, fears of the US-EU trade war have notably eased, reducing downside risks for risky assets. Okay, that was a report that I read from Commonwealth Bank earlier this rising. Despite the 2 to 3 days of modest sell pressure, the crypto market continues to show strength. As long as we remain above last week's lows, which is around 3.6 trillion, the uptrend, in my personal opinion, still remains intact. We'll go over that here in terms of technical analysis in just a second. I still personally remain cautiously optimistic. While stronger labor data and inflation readings may delay rate cuts, the market still seems comfortable for now holding on to the narrative of easing later on this year. That said, all eyes are on Jerome Powell's upcoming remarks next week. Any shift in tone or renewed hawkishness could serve as the next major catalyst that could weigh on the markets. Keeping in mind, we went over this, and I believe it was the July 17th Zoom call, where we talked about December 2024. It was the 18th of December. Jerome Powell came out and dialed back those rate cut expectations and came out excessively hawkish. Well, again, we could possibly see that same environment unfold. keeping in mind that right now the market is extremely hopeful and holding on to the rate cut narrative. If Jerome Powell comes out next week and dials all that back and says something that is aggressively hawkish, where the market starts to reverse those rate cut expectations and instead push them back into 2026 because of what Jerome Powell says, it's most likely going to have a negative impact to some degree or to some extent on crypto. Okay. And again, it's not guaranteed, but based off of historical data, we can see that hawkish remarks tend to have a negative impact on crypto, inversely to the dollar. Okay. Until then, right now, in my personal opinion, the bullish narrative continues to hold. Risk assets are stabilizing as of time of recording, and there is no concrete evidence yet that this rally has run out of steam. But we must remain vigilant and flexible, especially if macro data or Fed guidance begins to contradict the current market positioning, right? So that is the fundamental report for today. Let's go in and take a look at the current market landscape, starting off with the total cryptocurrency market. All right. Right now, again, why I remain cautiously optimistic. What do I mean by cautiously optimistic? I'm still bullish, but I'm willing to react if the market conditions continue to worsen and the sentiment sours, and we see some type of fundamental shift that supports the narrative that we could possibly see a deeper correction. And right now, we're not seeing that just yet. Albeit we're seeing those things possibly start to linger, we cannot just anticipate or assume that they're going to unfold because we don't want to get caught with our pants down, keeping in mind that this pullback could still continue to hold bullish support and continue to track higher if the conditions were met for a continued risk on environment, right? We don't want to get caught thinking that this was the market top, that the market's going to dump further, when in reality, this was just a pullback. So why on the higher time frame am I still bullish above 3.59 trillion? It is because that was this last week's low, right? Taking this week by week, based off of just the logical assumption, if we continue to see bullish price action week after week after week without sellers overpowering where last week's buyers came in and aggressively pushed the market up, then the path of least resistance, therefore, most likely remains skewed to the upside. So with that being said, right now, this is the most recent and relative higher low in the total cryptocurrency market cap that I'm paying attention to before I shift my bias. Now, if we end this week and this week's low comes in at 2.73 trillion, then next week I'm going to move my levels up. We're just not there yet. So for now, the low for the weekly low that we're paying attention to, or at least I am, comes in at 3.59 trillion. That means even if we were to see a pullback down into last week's low, I would still remain optimistic that buyers could defend and push price action back to the upside, keeping the overall uptrend intact, right? Zooming out, you guys can see how even though short term that would be relatively painful, as that would require probably another $200 to $300 billion wiped from the market, the higher time frame uptrend from last week's higher low to this week, creating a new higher low, even though it was a induced pullback, could still continue the uptrend higher, right? So that is why for now I remain cautiously optimistic, still taking advantage of discount opportunities as they come about. Now, just taking a look at what I recently drew on here, this was yesterday's market high at roughly about 3.92 trillion. You can see that this was yesterday's low. And if we take a fib to see how much the market has recovered as of time of recording, you can see that taking from the high to the low, the market has rekindled about 62% of yesterday's losses, right? So I wouldn't say that this is a significant sell-off, albeit we did see a substantial amount of money wiped from the market yesterday. This is not a complete trend reversal of the weekly time frame, okay? So on the weekly, we're still making higher highs and higher lows, and until we break last week's low, that remains intact, okay? So moving forward, we know the fundamental landscape that we would need to see, right? Ideally, we would like to see a more favorable outcome between the EU and the US surrounding their trade implications, tariff negotiations. We would ideally like to see a dovish Fed next week, or at least to some extent, Jerome Powell hinting at the possibility of rate cuts remaining on the table, even if he does mention that there have been some recent inflationary risks due to tariffs, even if he does mention that the labor market remains strong and resilient, as long as he continues to support the narrative that the Fed, if the data supports it, can be comfortable cutting rates, then the market's most likely going to hold on to the rate cut narrative and continue to price that in. We just need to be mindful because he could shift that narrative next week and dump on the markets by coming out aggressively hawkish. That is a situation where we would 110% change our narrative and try to readjust our positions for a deeper retracement. Okay. But we're just not there yet. Over on XRP. All right. XRP technical analysis has been extremely accurate. So first we'll do a risk on adjustment, and then we'll talk risk off. If the market mood continues to worsen, what levels will I be looking at? So in yesterday's call, excuse me, on July 20th's call, I told you guys that I would be allocating some capital into XRP at $2.94 to build DeFi positions. That means XRP that I'm going to be using specifically for DeFi. And yesterday I did that. So I bought about $1,000 worth of XRP yesterday at $2.94. When it came into that delta level, you can see now that XRP is actually slightly in profit, nothing substantial, but now we're still hovering at about $3.24. Keeping in mind that last week's low on XRP comes in at about $2.80. Ideally, in order to see continued risk on sentiment or expect higher prices on XRP, we'd like to see one of two things unfold. This week, we'd like to see XRP price dip back down into $2.75 to $2.94 for buyers to defend previous weekly lows to continue to push price higher. Or we'd like to see a continued market sentiment improvement from where we currently stand, break above $3.25, retest that, hold that as the support, or continue to consolidate around it, which shows that sellers are unable to overpower buyers. And that means the path of least resistance is most likely skewed back to the upside, where we could come and revisit these intraday highs at $3.62. And if we were to overcome those again, our next target on XRP until we overcome it is still going to be $3.82. If we ever do end up breaking $3.82, I will put the limelight on $4.44 as an overall bullish target, just in case we see an optimistic risk on mood heading into next week unfold. $4.44 is our next bullish target above 382 in terms of our sell deltas. But for now, taking this level by level, we need to see either a dip down into 294 to 275 for buyers to come in and aggressively defend their previous bullish positions to push markets higher, or we need to see a sustainable break and retest of 325, consolidation, and an attempt by buyers to take price higher in order to see higher prices on XRP. Couple all of that with a sustainable bullish fundamental environment. Dovish Fed, data that supports rate cuts would be ideal. No geopolitical tensions over the weekend or heading into next week. Continued trade negotiations that support positive talks on both sides of the jurisdictions, especially in Japan, US, China, US, EU, US. We still have Canada and Mexico to be mindful of as well. So just continue to monitor those things moving forward. All right. On the flip side, if sentiment sours and we cannot see an attempt by buyers to overpower that $3.25 range where sellers are currently showing some of their hands, and we see a failed attempt, we see the market sentiment sour, the next bearish target on XRP is going to come in at $2.75. If we cannot see this recent dip buying opportunity at $2.94 hold as a higher low, and the market continues to go lower, then the only logical technical analysis is that the market's going to make a new lower low, lower high, lower low formation, and this is going to turn into a distribution schematic, and we're going to see lower prices. So $2.75 will be the next bearish immediate target, which comes in at around last week's low. If we end up breaking last week's low, that is going to open the door for a deeper retracement from the July move and send us back down towards $2.42 to $2.26 as our worst case scenario targets for XRP for now. And that would be a full-on correction of pretty much the entire move from July, right? But again, we are far from those levels, and we would still need to continue to see risk-off sentiment unfold in terms of fundamentals to even get there, and we're not there yet. Next week could definitely be a contributing factor depending on the commentary from Jerome Powell. But outside of that, I don't think it's anything to be worried about until we break last week's lows, right? Which we have not done yet. So with that in mind, that is my TA analysis for XRP. total cryptocurrency market cap, and taking a look at the fundamentals. Make sure that you guys thoroughly read this and understand it yourselves. Make sure that you guys don't get distracted by the noise out there that exists on the internet. You continue to take these days level by level, fundamentals by fundamentals as they come out, and you adjust to the changing market conditions and don't marry a bias. Outside of that, I'll leave the floor open for questions for this real fast. And if not, then we'll transition. We'll openly talk about Bitcoin and ETH, and then we will end our Zoom calls for fundamentals for the week. All right.